Some of the most successful traders in the world trade using momentum. They understand that if a market is in a certain trend, let's say a downtrend for instance, and has a lot of momentum in that direction, that trend is more than likely going to continue unless there is a reason for that market to turn around. This can be a very powerful tool to use in our trading, but how do we spot a market that has momentum? And even more so, how do we place trades based on that knowledge? Well, that's exactly what we're going to discuss here in today's video. We just took a live trade out here on the Pound New Zealand chart, which is a chart that has a lot of momentum to the downside. We are going to discuss how we spotted that momentum and also how we took the trade itself. So if that sounds interesting to you, then make sure you go ahead and subscribe here to the trading channel. We come out with tutorials like this each and every week, along with Monday market breakdowns, talking you guys through the trades we're taking a look at throughout the week and the most important levels of structure that we're planning on making trades around. Sign up for our email list if you'd like to be one of the first alerted whenever we come out with those videos. The link for that's in the description, and along with that, you'll receive other free educational content we don't offer here on YouTube. So without further ado, I'll let the intro and disclaimer roll. Go ahead and click that like button to support the channel, and I'll see you guys on the other side. So here we are back on that Pound New Zealand momentum trade on the hourly time frame. And as you can see, we've now pushed down, hitting our first targets. We had a couple of different positions open on this. We've now taken off our first targets here. We're going to move the stop loss down to break even and let this continue down, see if we can get some extra profits out of the momentum of this market. And that's one reason trend continuation trading or momentum trading can be so beneficial, is because of not only your greater chance of actually having a winning trade, but also the ability to take profits that are much larger than counter trend trades or regular trading opportunities. Because again, once a market is in a trend and has momentum in that direction, it normally continues in that direction. So we'll see if the Pound New Zealand continues in this direction. I'll be keeping you guys updated as this trade plays out throughout the rest of the video. So traders, it's the next day and we're back here on that Pound New Zealand chart. As you can see, the momentum of this market did push it down enough to hit two different targets. Unfortunately for us though, we did move that stop loss to break even. We ended up hitting our first targets in through here, and then the market pushed up and hit our stop loss for break even on the second part of that position, barely stopping us out before pushing down another 100 pips all the way into the 1.865 level. Now, why would we want to trade using momentum? Well, unfortunately, most traders try to pick the very top and the very bottom of a market. What do I mean by that? Well, even if some traders made this trade and ended up getting profits out of it, they would be kicking themselves because they didn't get in right here at the very top of the move in order to capture all of this profit, when in reality, it would be extremely difficult and improbable for you to actually pick the very top and the very bottom of a market consistently. What's much easier is capturing momentum in a market. And what do I mean by momentum? Waiting for a large move down, followed by some type of pullback and entry reason, and then catching the next large move down. Maybe you don't get in from the very top. Maybe you don't get in from exactly where the market started to push down. But if you can wait on this pullback and find a way to get in right here and capture the rest of this move down, and you can do that consistently 60 or 70% of the time, then you are going to be a very profitable trader. Because not only are you capturing momentum to the point that you're trading with the trend of the market, which gives you a higher accuracy on your trades, but also you're able to place minimal stop losses above a previous swing high and get a great risk to reward out of most of these trades. So let's talk about how to actually spot momentum in a market. So first off, I'm going to go up here to the whiteboard and we're going to take a look at a market that has momentum versus a market that does not have momentum. So a market that doesn't have momentum would look something like this. Obviously, this is just a consolidating market, right? We're going in the downward direction, but we have all these really nasty looking pullbacks in through here, in through here. And this would be an example of a chart that I would not want to trade using momentum. Maybe in this area, maybe once we make this big impulsive move down, that might be a time where you can start looking for some momentum trades. But as you can see here, the difference in the market here and through this entire area before we get this move down, the market's just kind of consolidating. It is moving down, but it's not moving down in a very strong way. Whereas here, all of these moves are very strong and impulsive, breaking structure, having very small pullbacks, and making very large moves to the downside. So that's how we can spot momentum in markets, and most of the time this momentum comes from news events. Now, I am a complete technical trader. I do not pay attention to news whatsoever. But if we zoom out to a 4-hour chart, I know for a fact that either some really bad news for the pound or really good news for New Zealand has been happening. The way I know that is from what I see on this chart. I can tell that from this level there was some type of bad news that came out about the pound or good news that came out about New Zealand, pushing the market down because we have a very momentum-driven move. This would be a momentum-driven move all the way down to the 1.8818 level. So does this mean that you have to know the news events that are coming out, or you have to predict what they're going to be? No, because remember, we're not trying to catch the top. We're not trying to judge the news and then capture every bit of the move down. If the news can just push the market down enough for us to see that there is a momentum move coming down, on the hourly chart, this right here would be a heavily momentum-filled move. And we'll zoom down and take a look at that in just a second. But this pullback on an hourly chart would give us an opportunity to enter the trade. So after the news event, when we have momentum, we've already created momentum in the market, is when we can start looking for those trading opportunities. That's why I'm saying use news in order to find momentum markets, is because the news is going to push the market around. That's true. Fundamentals do push the market around a lot, just like technical levels of support and resistance do. So once we have that news that comes out, maybe a major news event, and we get some momentum out of the market, that's when you can start to take advantage of momentum moves, start taking advantage of trend continuation out of a pair. And as you can see, after that news event that caused this push down from the pound New Zealand, we got a pull back up, and the momentum continued all the way down to here. And as long as these strong moves down, this one, as long as these strong moves down with all red candles continue, very momentum moves, then we can continue trading these pullbacks. As the market pulls back up, go ahead and take a trade there. Now this move is not a very momentum filled move. We have a couple of green candles in here, this one little small pullback right here, then another push down, another push up, but this one here is a very strong move down. This is one where we can wait for a pullback and an entry reason to go down. Also, this was a pretty strong move as well, pulling down through here. All red candles coming down, breaking below structure. Then the pullback, this is where we decided to get involved on this trade, and the move down. And we'll go ahead and head down to an hourly chart so we can see this a little bit better. So from here, our top, we had that big move down. Big impulsive move. Very few green candles in that move going down, showing us a lot of momentum. We get the pullback, the entry, another move down. The pullback, some type of entry, another move down. The pullback, maybe an entry on a flag pattern right here. And then this move down. Now, can you tell the difference between, let's go ahead and delete all these drawings. Can you tell the difference between this, and this? These three would be, I'm just going to label this ML for momentum legs in the market. These are momentum legs, meaning that the market has a lot of momentum pushing down. All three of these would be momentum legs. What is the difference between those three and then this move in the market? Can you tell the difference? As you can see, during this move in the market's coming down, pushing back up, coming down, pushing back up. There's not so much momentum here that we have very few green candles, such as here, here, and here with these moves that have a lot of momentum. Now we have another pullback and a move down. This move would be a move that has a lot of momentum. So this is a case where we can take, after a pullback, an entry. Then boom, is that a momentum move? Of course it is. We only have one green candle during this entire move down. And I know all these drawings could be getting a little bit confusing, so I'll go ahead and delete them all. As you can see, this big move down here only has one green candle in the entire move, showing a lot of momentum. Once we saw that, guys, we looked for this pullback and we got involved in a trade right in here because we saw momentum in the market followed by a pullback. So let's zoom into this trade and talk a little more about it. So on this trade, as we just said, very momentum-filled move to the downside. Then we have that push up. And what was great about this trade is not only are we combining momentum in the market and an entry reason to go short, we also have a major level of structure looking left right here at this area. So again, guys, like you hear me talk about in most of my videos, it's not only about using momentum in the market. It's not only about having a level of structure looking left. It's not only about having your targets and stops in the right place. All of those things have to combine in order to make successful trading. So in this scenario, we had to have a momentum filled market, a momentum leg in the market pushing down. Once we saw that, we looked left, found a level of structure. Once we saw that level of structure, we waited on a pullback and an entry reason to go short. We ended up going short and hitting targets on this trade because of that. It ended up being a successful trade because we combined all of those reasons and conditions in order to make an accurate trade. So guys, that's how we can spot momentum in the market. That's how we can use momentum and combine it with other market factors in order to make accurate trading opportunities. I really hope this video brought some value to your trading. All right, guys, so before I let you go, I want to talk about the 3 major factors that are going to contribute to your success in trading. Your success in trading will depend on these 3 factors. 1, your skill of trading, the actual skill you possess of understanding the way a chart works, understanding a certain strategy that you're going to use. Next, your ability to be disciplined to those skills. This comes down to trading psychology and understanding that drawdowns will occur, and understanding that even though they occur, you have to have the discipline to stick to a trading plan. And the third and final factor is risk management. You have to understand that you cannot risk your entire trading account in every trade. You need to be using something called risk capital. You don't need to be risking an amount of money that would affect your lifestyle in a negative way if you lost it all, because there is a potential to lose it all in this game. Now, here at the Trading Channel, we try to help you master all 3 of these skills, not only for free here on our YouTube channel, but more exclusively and in much more detail in the training program we offer called the EAP. This program's helped hundreds of traders improve their trading in 2017. I'll go ahead and put a few of their testimonials on the screen while I tell you what all is included in the EAP training program and how it could possibly improve your trading in 2018. In this program, you'll learn to master all 3 of these skills. You'll learn how to master the skill of trading, and the way we do that is we offer an extensive training course going over the strategies that we actually use in our own personal trading that's allowed us to be profitable over the past few years. You'll also learn how to be disciplined. You'll gain the ability to understand why discipline is important, and you'll also be able to improve your discipline through some things we do in the course, such as the alerts you receive will show you that I continue to trade even if we're going through a drawdown, or if we're up a major amount throughout a month. No matter which direction that pendulum swings, we continue to trade the trading plan. We stay disciplined to that trading plan. And also, to help with discipline, we have review videos at the end of each week that go over the alerts we sent out throughout the previous week, discussing each of those trades and discussing how they affected our equity curve, how they affected our account in general, helping you to better understand why it's important to stay disciplined. And the third and final factor that we try to help traders improve and master is risk management. There's an entire section in the EAP training course that is dedicated solely to risk management. It talks about using risk capital, and it also talks about how to set up the actual risk management plan that we personally use here at the Trading Channel. Now, when it comes to risk management, that's more of a personalized decision, and that's something else we go over in the course. But again, guys, we try to help traders master all 3 of these factors, and in doing so, hopefully put you on a faster path and an easier path to becoming a profitable trader. I know that if you're here watching these videos, that is probably your end goal. And for those of you who are interested in investing in your Forex education, in speeding up that process of going from where you are now to actually being independently profitable, then I've left a link in the description below. And if you'd like to check out the EAP training program and hear a little more about it, a little more about what's included in that program, then you can just click that link to receive a 30% discount on the quarterly option. So with that said, guys, I hope you all have a great rest of your trading week. I hope you trade green. Don't forget to go ahead and subscribe here if you want to be alerted whenever we come out with new educational content like this, along with our Monday market breakdown videos. And definitely click that like button if you found value in today's video. And I'll see you guys Monday for our weekly market prediction video. Talk to you soon.